Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. We have to take a look today at the S&P 500, which continues to knock on the underbelly of a key trend line that will literally determine whether the market has the potential to have a major breakdown or if we're headed back to all-time highs. So let's dive into this right now and take a look. This is a wedge pattern that I've talked many times about over the last few months. This has kept the S&P in check. Notice again, going back to May, every time we came down to this trend line, we would bounce over and over and over again until last Friday when we had that humongous sell candle that flushed the market through. Now, since then, we have not confirmed the breakdown. To confirm the breakdown, you have to close below the low from Friday. As of now, that has not happened. In addition, we've rallied back up to try to get back above this trend line. Should we get back above this trend line, the market goes back into the upward momentum grind, which can easily retest new all-time highs and this trend line. Now, this orange trend line is important because it was a former major support going back to October 2023, to the low in August of 2024, and even the low in January of 2025. We then came up and we then started to get the tariff issues, the Liberation Day, and the subsequent massive selling that followed, and that broke the trend line and we confirmed below. Now, remember in technical analysis, support right here, once it's broken and confirmed below, what does that become? It becomes resistance. And you can see that happening right here. We hit the line and pulled back. Here we hit the line, chopped, and then we had the big drop in the market. So really, we've been hovering in this wedge pattern going back to May, and finally the markets broke below. But this is the key. When you're trading between this line, this low here, and this yellow line here, this is what we call an orange, or I should say a yellow warning sign zone. The markets have not confirmed a breakdown yet, so there's no breakdown. All right, it's not a confirmed breakdown. It's basically in this gray area where we could recapture the yellow line, and then we could go back to the highs here, and that would be your resistance point. And that would be around 6,800 on the S&P. If first we don't recapture the yellow line and we close below this low, now it becomes a confirmed breakdown, and the odds favor, the probability strongly would favor at that point a major move down and likely a market top. All right. So again, anything between here and here is this warning yellow zone. Up and down, up and down. We could trade there as much as we want. It's still a warning area, but it is not a confirmed breakdown zone. If we get back above here, we're back in green lights and the markets can chop higher. If we get below here and confirm, down we go, probably fast and furiously. So this is, again, it's so important to look at these levels on the S&P and make sure we understand what each zone means, because it really will tell us if the markets are okay, are they safe, are they kind of in a cautionary zone, which is where they are now, or are they in a full-out breakdown mode, which would occur below this area. All right. So again, I really wanted to go over this for all of you so you have specific levels to monitor and watch on the S&P. And just to talk about what's happened here, notice what is happening. On the S&P, look, yesterday we got above it, but we closed below it. Today, the S&P tagged the yellow line. Right now, on an intraday basis, we're back below that line. So these are the things that tell me this is a significant level. If the markets can really fight back above, that's great, and we have to have a daily close there. If not, it's still in the warning zone for a potential attempt at confirmation to the downside. So really, really interesting here, guys, as we continue to monitor this market up and down and left and right. And really at this point, this market continues to be a market that is being driven by semiconductors. So yes, some of the other stocks are participating a little bit, but if you look at the markets, a majority of the upside is being pushed by the semi trade, both in the NASDAQ 100 and in the S&P 500. For me, at least, I'm watching the Nvidia chart and the SMH chart. Those besides the S&P. The S&P is great because it's 500 stocks. It's a very broad view of the overall market. But when it comes to really thinking the markets are breaking down, you got to go to Nvidia. And Nvidia is fascinating because here we had Nvidia. Look at this wedge pattern on Nvidia. This line, by the way, this is the bull market high of 2021, connected to this high here in 2024. And then look, we literally hit that line, boom, again. Notice how every time we hit this line, drop, right? Drop. So it happened again right here. Here we closed below. Yesterday we were below and we would have confirmed. But if you zoom in, did yesterday's close below the low of the previous day to confirm the breakdown? The answer is it did not. Absolutely did not. So this is still an unconfirmed breakdown. But if this were to break down, that would kind of add credence to the potential for the S&P to break down. Lastly, we have the Semiconductor ETF. This one, my friends, is just a monster, okay? In terms of it is not even close yet to breaking down. Look at this trend line right here, folks. Let me make it into a brighter line so we can all see it. This is, again, your highs from 2021, just like Nvidia, to your highs in 2024. And then look, up here, boom. But look, we're right back to that line right there. Okay. Now, what does this mean? Well, if we look at this chart, this one's not even close to breaking a key trend line here. You'd have to come down here. So interestingly enough, Nvidia is weaker than the overall semiconductor ETF, which kind of makes sense because if you look at what's been performing lately, what has been performing? AMD, all-time highs, right? Micron, all-time highs, pushing up again today. And so generally the semis overall are doing better than Nvidia. Nvidia still is a $4.5 trillion company. So it's really important to the health of the market that it stays up. If that were to confirm, it's one domino. But you really need to see the SMH start to collapse. That's the one that if it breaks down along with Nvidia, game over for the stock market, in my opinion. And we'd obviously see confirmation on the S&P at that point and at least 10%, maybe 15% correction in store. So again, guys, all of these factors, we always have to look at the charts for guidance. And again, isn't it amazing how so many people would jump the gun on Friday's down move, all the tops in, all this stuff. But in reality, the charts tell us the pure, honest truth. The answer is yes, it's below that level, but it's unconfirmed. And we're in a warning area, but not a, oh my goodness, a breakdown is occurring. So when you're in a warning area, you can recapture that trend that you broke below very easily. I've seen it happen over and over again. Remember, everything I do is probability based. And that's the kicker. So it's all charts and probabilities over and over again. It gives me the purest form of analysis that I can give to you. And therefore, that's why I use it. Have a good one, guys. Take care.